following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. This is Steve Rhodes. We're going to go ahead and suspend that opening. Just don't have the windbags for it like normal, but welcome to the April 19th edition of the Trader's Edge Show. I'm your host, Steve Rhodes, and would love to hear from you, so you can always give us a call at 877-927-6648. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any instant message will do. So let's go ahead and look at these markets out here. Dow is trading down 72 points, trading out 20,450. While the S&P is up a point, the NASDAQ up 22 points, about 0.4% to the upside. Russell 2000, the leader, to the upside. Well, the Russell and the semiconductors both up 0.6%, $8 and $6 respectively. New York Stock Exchange is basically flat. It's off 10 points, but the advanced decline oscillator reading still above zero. Wilshire 5000 is up 31 points. So all looks good here in the U.S. with the exception of IBM and maybe a few other stocks inside of the Dow. Leading the charge out here to the upside dollar-wise, $51 to the upside is Intuitive Surgical, ISRG, up nearly 7%. Mettler Toledo International up $13 or nearly 3%. Chipotle's up 2%, $9.50. AutoZone up 9%. Lithia Motors up 8%. To the downside, you've got IBM, $8. To the downside, 5%. BlackRock is off about $5.70, 1.5%. Murphy USA off nearly 7% or $5. So we've got some things moving and grooving. But let's go take a look at the markets now. When I say I am just really, I've been traveling on the road for the last 5 hours and just sat down at about 10 minutes to 1. So this is, for me, this is also a fresh look at the charts to try to figure out what's going on. So let's go figure out what's going on. Now, the first place that I will start, I mentioned this just a few minutes ago. Here we're taking a look at the left-hand panel of our chart, New York Stock Exchange. Trading off slightly, but if you notice the very bottom panel, you're going to see a reading of positive 14.28. And we've seen the advanced decline oscillator reading finish above zero. This would be day number 3. And that's after moving down below. I'll go ahead and explode this up on the screen. That's after being above zero, moving down below it for 1 day, basically, and then moving back above. When you see that, it's kind of what's referred to, it's not kind of, it's referred to as a simple structure. Of course, there's nothing simple in this game, but a simple structure just simply means when you move back down below zero and you bounce right back up above it, it tells you that the sellers, those would be the guys below zero out here, were never really in control. It was always the buyers. Now, it's very subtle. It's just slightly above zero, even with price trading lower. But it's another indication that the market is, in fact, trying to form a bottom. Now, what the Sam heck just happened there? There we go. Okay, so now we're back to our 4 screens out here. The NASDAQ Composite, you can see it's run right into a trend line out here, but it too now is above zero. Now, in the case of the NASDAQ Composite, let's go with the assumption that it's going to trade or complete, or it's going to go ahead and finish above zero in its advanced decline oscillator reading today. So long as it stays above zero tomorrow, this will be key, then it's telling us that you've seen a change in trend out here. If it bounces down below zero, closes down below zero, is what I really should say tomorrow, then it's going to tell you that sellers are in control of the NASDAQ Composite, the exact opposite of what you and I just looked at with regard to the New York Stock Exchange. Is that important? Oh, goodness, yes. Because if it does stay above zero, New York Stock Exchange ends up that way as well. It's just clear messages. What we like to have are clear, non-conflicting messages, little synergy, as they like to say, inside of the market. Now, with regard to the Dow, you know, that's a struggling little guy out here today. We'll go take a look at IBM, see where it's trading into, and maybe a few other stocks as well. If we look at the S&P 500, though, really what we're going to do is switch over, take a look at the volatility index. Right now, what we've seen here this morning or today at some point in time, we saw the spot VIX index trade down to a low of the low of 1346. Now, the upper Bollinger Band is 1349. That's a little blue. We're looking at the bottom panel of my screen, by the way. That is a normal place once price gets above the upper Bollinger Band for price to come back and test it. We've seen a test and rejection. What we're going to see here is we're going to eventually see a test and a failure of that line. And then you and I are going to go ahead and see the spot VIX index get down and test the 1273. It will be a slightly different number depending on when it does. That's the 50-day exponential moving average. And then when you see price close below that level, price will go ahead and move down to or below the bottom of that Bollinger Band, 1103. Then what that's really saying to us as we take a look at this is we're really seeing here, we're seeing the spot VIX index fall in line with all of its future contracts out here. That, quite frankly, will really be set up from a bullish standpoint. Right now, you're at 1413. The May contract is at 1415. So the spot VIX got to continue to move lower. It will continue moving lower. It found just a little bit of support earlier. That support is eventually going to go ahead and fail, and things are going to all get back in alignment for these markets, the S&P in this case here, to continue moving higher. Now, if all of that is the case, let's go take a look at our futures contracts. The Dow definitely throwing a hissy fit today. It's the only one of the equity futures contracts trading below support. And the support level being 20,436, the bottom of its daily profile. The day is not over. That happens to be a brand new profile that formed out here. I would anticipate that you'll see the Dow Equity Futures contract close back above the bottom of that box, 20,436 or 20,374 by the end of the day. What if it doesn't? And okay, no big deal. You got the Russell that is out in front. You've got the NDX that is out in front. That is exactly what you like to see. In fact, what we ought to try to find out is, let me go see if I can find that chart here that takes a look at the Russell 2000 versus 1000. Probably should have left it on, but let me see. Russell, where do I have it? I know it had a weird name. There we go. Let's see if this is ticked up to the upside. Oh, it has. There you go. So we're looking here, folks, at the if you're not watching us on TigerTV, what we're looking at in the top portion of my screen happens to be the Russell 2000 compared to the Russell 1000. The market itself performs better when the Russell 2000 outperforms the 1000. And in this formulae here, that's when you have the line starting to move to the upside out here. So this is just a ratio that we're taking a look at, but it is a very important ratio to give us signals as to what the market wants to do. The messages here are just simply clear as a bell. And again, I don't remember where the clear as a bell came from, but or Isabel. That's probably where the name Isabel came from, isn't it? How about that? I just actually realized that. The clear as a bell probably came from, of course, I'm probably going to be found wrong here, and somebody will tell me during the break, but that's okay with me. The Dow's off 77. We'll go look at the GDX for Danny in Atlanta. We were stopped out of that for a profit earlier today. We just let the market take us out. Now we'll go see what it's doing and where it's headed to. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So today, same game plan. If I all of a sudden start losing it, meaning cough-wise, we'll go ahead and shut things down because I do not want to be hacking into your ear. You don't want to hear me hacking into your ear. But, we made it through yesterday. I think we're going to go ahead and make it through today. We're going to go take a look at the GDX. I've just kind of dialed things back a notch or two, and that seems to be working. Kind of lightly get that air through the old Stevie's windpipes out here. But we're going to go take a look at the GDX right now. For Danny and Atlanta, and for each of you as well. So let's go take a look at the GDX right now, trading out at 2350. Volume in it at this stage is 42 million shares out here. The last time we were down at these levels was 44 million shares. So we do have volume picking up to the downside inside of the GDX. So what that says is we ought to see the GDX target the March 15th level. Now, the reason why I'm choosing March 15th is because that is the last time that we had volume out here. So that says anywhere between the high, which is 2304, and the low, 2137, is game. And the reason why I say it's game right now is we had a brand new market profile that formed. Support should have been 2376. We're trading right now at 2351. We have volume coming out of this, or it appears we have volume coming out of this. So that says now you've broken through, or it appears you've broken through the bottom of the daily, brand new daily box. You're trading below the weekly point of control. By the way, the weekly configuration in the GDX has a structure. I knew I could get that word out. Has a bearish structure to it because you've got that point of control closer to the top of the box. So let's respect that. Let's also respect the big volume that we had in here. I don't know where it's going to head to, just that range. The other thing that you and I could do, Danny, is we could go take a look at some retracement levels out here, see what lines up. And inside here, you're already at the 0.382, but with volume coming out, should head lower. So I would say the next target, most likely 2257, is what you ought to be looking for. Now, if that is really going to occur out here, then we need to see what's going on, or we need to go take a look at what's going on with regard to the currency pair, Japanese yen. which is up about 400 pips as we speak right now. And I can tell you that the Japanese yen is sending the signal to you and I that it really wants to defend this 108.47 level, and that it wants to trade above that, because any move above 108.47, and you're trading at 108.83 right now, says that this thing wants to move higher. Now, if this is a true buy the D point of an A to B equals CD to the downside, and the reason why I hesitate slightly is because we really haven't had a confirmed, we've had a bullish signal, we just haven't had a confirmed bullish signal. Let's go with the fact that it will confirm itself. Just you have to use, in order to get confirmed, you got to use the nuclear option these days, right? You just can't, just can't have the Senate go ahead and, just confirm it for the sake of confirming it. So instead, let's go take a look at, if it is confirmed out here, nuclear or not, where price ought to move to. Well, interestingly enough, the 0.382 retracement, the minimum move on an A to B equals CD, happens to be just slightly above the bottom of its weekly profile. So this says to me that it's not unlikely for us to see the Japanese yen target the 112 to 111.67 area out here. And if in fact that's what unfolds, then we go back to the GDX as well as gold and silver, and what we ought to see is the GDX really start to target the lower part of its range out here. So does it make sense to stay inside the GDX right now? That might be a question out here. And the easiest way to answer that, let's just come take a look at this here. Let's go see if price is trading below the oscillator unchanged line, Stevie's red line out here. So we'll punch this up on the screen. I'm hoping that, okay, it's punched. There we go. No, it's trading below that level of support too. So this suggests to me, here we go. We have another line, right? I think the 0.618 retracement level got us into the 2277-ish area. That happens to be the bottom of, you'll see a little dash line out here, one of the Tom DeMark support levels. And how about that? Interesting. The GDX form one of those TD setup 9 counts out there oftentimes where you do see a reversal. We're seeing that. We're seeing volume. So this tells us that this is suggesting to me that the miners know that the yen is going to be successful at supporting that bottom, and that it's going to move higher. There's going to be pressure here, and so you just wait for the next trade setup. Danny, does that help you with regard to what it is that I'm looking at out there? I hope that it does. And then the other thing that you would do here is you would go take a look at some of the mining equities themselves. The top 5 represent a substantial portion of the GDX itself. ABX, let's go see what Barrick Gold, that's the number 1. Does this have volume in it today? 9.6 million shares going into, 9.8. So, of course, this has volume. This is going to go back into that bar. It's going to be the first one there. In fact, I may have already hit it. So the high is 1907, the trading session of March 15th. The low today, what did I say? 1907. The low today, 1902. So, and you're trading at 1906. So when this thing, if this Barrick Gold closes inside that bar, and quite frankly, closes below strong support, which is going to be 1889, then that signal will come, the GDX is going to head much lower. Can you trade the opposite side of that? Yeah, you absolutely can. And I wait for Barrick Gold as one of those equities to give you that side of the trade. You can take a look at Newmont and Goldcorp out here. If we go take a look at Newmont Mining, right now 2.8 million shares. It's already trading into it, a little sign of strength out here. So it looks like Newmont is going to pull back to 32.74. That's its target. Goldcorp, GG out here. This is going to pull back to at least 1465. It's already inside that sign of strength bar that had 13 million shares, and you're back with 5 million. Nonetheless, this is going to go tag 1449 as a level for it. That's Goldcorp. So, so the top weighted equities out here, they're communicating that message. So you've got gold, silver. If we go take a look at gold, levels that one would want to be focusing on and paying attention to. Now, we've had a brand new box form, and that entire level has been explored thus far. But I would expect that we're going to see an eventual failure here. The bottom of that level, to give you that confirmation, is going to be the 1272.80 level. You're trading at 1283.50. So any close below 1272.80, that says it's time for a retracement mode inside of Goldilocks. If we take a look at silver, down 10 cents, it has explored the bottom of its box, brand new box that formed out here. So watch the level of, what is it, $18.10? Yeah, $18.10. Any close below that says sayonara kimosabi. And says, which doesn't even make sense, but nonetheless, that's what it says. And that could explore $17.23. And nothing would be wrong other than if you were long. Hey, how about that? How about that for a nice little rhyme? So that's what it looks like the mining sector wants to do out here. Okay, light sweet crude. Light sweet crude is taking a little schnooker to the downside out here. We'll have to take a look at that when we get back from this break. As much as it looked like it wanted to be able to clear that 53.43 level, it's traded down to a key level of potential support. That being 51.16. You're at 51.25 right now. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, speaking of the front page of TFNN.com, it was just updated just before we came on the air. Next Wednesday from 5:30 to 6. In one 30-minute session, I'm going to do the coolest workshop that I have done. You know, I don't know if you ever get a chance to watch TED Talks. I know sometimes they talk about TED inside the Tiger's Den, but I love those talks. And in fact, if you ever do any public speaking, you should go out and buy the book. There's a book that talks about how all of these speakers, if you've ever watched these guys and gals, people, they give amazing speeches. Many times just really totally keeps you on the edge of your chair, so to speak. In other words, you keep saying, tell me more, tell me more. And part of the trick is what they've done tests on these, and each speech is about 18 minutes long. So they try to keep it to 18 minutes. And I'm going to keep the most important part into 18 minutes as well. This is going to be a 30-minute workshop. By the way, this is the coolest thing. TFNN has never done this. So this workshop, this TED Talk, Steve Talk thing is so important that we have automatically opened it up to every single current TFNN member. That means if you are a member of TFNN, you don't have anything that you need to do other than show up for the workshop next Wednesday at 5:30. That's right. If you're not sure if you're a member, you're a listener here, you've signed up for something, but you're not sure, just go over to the homepage of TFNN.com, click on the login button in the upper right-hand corner, try to log in. That'll take you to your members page. If you don't get in, you don't remember the password, just hit forgot password. That will be emailed to you, and then you'll be in. There will be a link on there. You'll be in the workshop. Now, the reason why this is so important, why it's been opened up, is because this is a workshop that's going to apply to 100% of our listener base out here. This is really focused on long-term investors, and that means if you are an active trader, you're also in the market from the long-term perspective. And I'm going to share with you the most important aspects of being able to identify bear markets. And I'll do it very quickly, and it's information. Will it be archived? It will be archived, Danny. I'm not sure if it's the normal 30-day, but yes, it'll be archived out there. So it's going to be, for me, it's going to be the most impactful workshop, the most important workshop, because what I ask you to do and come into this thing for free is to share this information, with your children especially, your family especially, your friends especially, your neighbors especially. I don't know who we left out. Pretty much anybody you see, because this is from now look, the cool thing is the tools that I share with regard to what works on the long term, it works on the short term as well. Bruce sent in an email. And he said to me, why did I say in the opening that the Dow should close, or the Dow equity futures should close back above their market profile? And that wasn't just a willy-nilly thing that I said out there, and that's a great question. Now, this is not going to be one of the tools that I shared during this workshop, but you and I use these tools all the time. If I put the 30-minute chart up here for the Dow equity futures contract, you're going to see that we either have formed or are in the seventh or fourth wave from the top that formed out here with one of these little price relative strength divergent patterns when it formed a little shooting star candle. Shooting star is a topping signal, a Japanese candlestick topping signal that is the opposite of the hammer candle, which forms at the bottom out here. So we take a look at different patterns. One of those are potentially seventh wave moves, letter G, and that happens to be blue colored in on my screen right now. So as we came into that 1:30 session, we had already started wave number 7. We may go lower between 1:30 and 2. And if we do, that seventh leg just continues out there. So now the key here for the Dow equity futures contract would be for it to close back above. Right now it's 20,420. Excuse me, I've got to blow this nose out here and cough, but I'm going to cough outside of the of that microphone out there. So, Bruce, that was the reason why I am suggesting that if the Dow is going to find its footing, it's going to do so relatively soon because of this pattern that is identified. Then it should close back above 2420, back above the level that I gave you, the bottom of its TAS box out there. Support will have held. If it doesn't, and I worried about my call that the market is forming the bottom, and the answer there is no, not worried at all. Okay, so Bruce, that hopefully it answered your question, but for all of you as well, this is going to be. And look, if you know folks that are just simply they're investors in the market, or they've ridden out a couple of bear markets out here, because another one is coming. And I'm going to show you exactly how to identify when that occurs, between being able to pick out the difference between a bear market and a correction out here. So this is something, by the way, that you will be able to use for life. I've tested this going back to 1896 out here. So it is very, very cool. Okay, let's go back to the markets out here. I don't see any other email requests. Let's go take a look at IBM. Try to get a feel for what IBM is doing. Now I want to punch this up on my other charting system too to see if there's anything that forms that we should be aware of. And so how about that? Speaking of hammer candles out here, actually today's candle, we'll call it semi-qualifies as a hammer candle. Now, the reason why I say semi, it all depends on where the body of this box completes. Oh, all right, before we go to IBM, we've got to go out to Marie. And Marie, thanks for calling. Thanks for holding. How are you today?
Oh, I'm fine. I hope you'll be fine soon, too.
Me too. This cold thing that I've had here over the past 6 weeks is a killer. I never get sick, but yeah. I can no longer say that.
Wow. Well, when you get it, you certainly get it big time, don't you?
Yeah, I tell you, if it persists throughout the evening as well, I'm just going to finally knuckle down and go to a doctor and see if they'll prescribe to me some kind of antibiotic, because maybe it's something deeper than just a cold, for all I know.
Yeah,
and I'm trying to treat it as a cold, but
sure.
But anyways, thanks for your well wishes. And you want to take a look at Stratasys SSYS, one of the 3D companies out there. Tell us what you're doing and how we can help.
Well, I'm in it, and I've been in it for a little bit here, so I have a nice profit. But I had been thinking it might go further, and I wanted to see what you thought.
Okay, so one of the things that we can take a look at for price projections is the A to B equals CD pattern that it has formed out here. And that takes us into, folks, the swing point that we're looking at with Marie, takes us down to December 30th, 2016, $16.37, makes a run up to $22.13, does that on February 14th, on Valentine's Day. Makes about a 0.786, really was a 71% retracement down onto March 9th. And then yesterday takes out its B point with wide price spread and accelerated volume. The B point being 22.13, 720,000 shares, and yesterday 3.1 million shares. Was yesterday an earnings release, Marie, or something? Do you know?
I have no idea. I wasn't around when it happened, and I said, whoa, what happened?
Yeah, so that was good. Now, when you entered this trade, did you have a price target of what where you thought this might head to?
Well, I was thinking this was it was forming a bottom, and I was looking to see if it could get up to 25.
25. Okay.
Yeah, back in September, I guess.
Okay, I think that it can. Would you be kind enough to hold on through this break?
Sure can.
Okay, we'll go back out to Marie. We'll take a look at Stratasys, which is going to $25.36 at a minimum. Steve Rhodes with TFNN. Be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Marie in Erie, Pennsylvania. We're taking a look at Stratasys, SSYS, one of the 3D companies, which yesterday completed a 1-to-1 lightning bolt or A to B equals CD pattern. Those are tools that we use to measure where price is going to. So, Marie, only 60% of the time, roughly 60% of the time, will an A to B equals CD pattern complete at the 1-to-1 level. One thing we know is that when you come into that D point, that 1-to-1 level, and you do it with a wide-ranging bar, which it did yesterday, very wide-ranging bar, even if you expand the bar to include the gap, that is a signal that is going to do more than the 1-to-1 move. The 1-to-1.272, which is the next mathematical Fibonacci expansion number that I use, takes you to 2536. So if we go to that 25 area on the left-hand side of the chart, what you were targeting was the September 30th swing point, which is a little shooting star, the opposite of a hammer candle. So that should be an area of some stiff resistance. That doesn't mean that's where you go ahead and necessarily exit the trade, but you should anticipate some stiff resistance. And if price closes above that, then what I would say is we'd go take a look at a weekly chart out here, because really this thing has been consolidating down at the lows for quite some time out here, Stratasys. And folks, this had a huge run back in 2011, went from in the $17, $18 area all the way up to about $140, and then made its way all the way back down. In fact, made its way down to a new low back in February 2016, down at the 1448 level. So there is one more shooting star that I see out here, Marie, and that takes you back to the week that began April 11, 2016. The high of which is 3046, the low is 2529. So I believe that 25 area that you're looking for should be attacked. If you close over the daily high of that shooting star, then anticipate that price will go up and test that 3046 level, and you get above that, and then the sky is the limit, it looks like, for Stratasys out there.
Yeah, I wasn't sure, if this had finished its basing, but...
Well, one of the things that it did do, and you picked up on this, which is very nice, is that this thing had made a high volume low, kind of an exhaustive move on November 15th, when there were 8 million shares to the downside. The low of that trading session happened to be $16.93. Now, that level ended up being surpassed back on December 28th, the 29th, and the 30th, all with extremely light volume, because the volume that was benchmarking was 8 million shares, and you were doing it with less than 1 million shares. Right. Even though it was holiday trading out there. That is a proper test of a swing point on light volume. And, and then in essence, you're really looking for some kinds of signs of strength out there. Well, sometimes, and that sign of strength actually took place on January 3rd, first day back, where there was 1.9 million shares to the upside out there. So you really, from a textbook standpoint, if Tom were teaching this class, he would tell you from a textbook standpoint, you got the test of that low like you want. You then got the sign of strength. And then wherever it is you picked up along this, you're in what looks like a very good trade out there.
Well, that's great. I have a tendency to exit too early, so I thought
But if you're making money, you can never exit too early. But this does look to me like it is going to go ahead and continue to move higher. Now, I believe, well, this much I know, we're in the favorable seasonal cycle that should last through May or July. Really July. I believe these markets want to continue to move higher, and you've picked one up here that should gain some momentum. Doesn't mean it won't have some resistance, but should have some momentum. If this were to close below 2160, then I'd come back and truly reassess my analysis here, but otherwise it looks like it wants to move to higher prices.
Terrific. Thank you so much.
Yeah, you bet. Thanks so much for listening and all your good wishes. Let's go to Chris in Montana. Chris, thanks for calling. Thanks for holding. How are you today?
I'm well. How are you, sir?
Very good. Thank you.
Hopefully
go ahead.
Hopefully you feel better soon.
Yes, I would I would love that. There's nothing as good as your health out there. So other than maybe a good trade. And so are you looking for a good trade on light sweet crude?
I am looking for a good trade.
Okay. Well, tell us what you're doing, and what is it that you trade when you trade black gold Texas tea?
So I was looking at on 3/8 when crude topped, and I'm looking at a 4-hour chart, and then we had that triple bottom down there.
Yeah.
I think on 3/14, 3/21, 3/26.
Yes.
And it touches those lines. That kind of completed. We kind of went back up, and so the way I look at it, we had a retracement of about 100%, back up to that 53.76 around there. Is that about right?
Yes, absolutely, absolutely. Yep.
And then we're kind of in the C to D now. Line. Is that I'm still new to this, so I'm just trying to run this by you to make sure I'm doing this correct.
Well, so there are two. So you're looking at this potentially being an A to B equals CD to the downside. Am I correct? Is that correct?
You are correct. Yes.
So in this case here, there's two possibilities. There's that one that you just mentioned, folks, and really what we're looking at here, how I would draw that pattern. I go to the high on January 3rd. That would be my A point. My B point looks like it's March 22nd. The C point out here is April the 12th. Now, if that's the pattern that plays out, then what Chris would be anticipating is a move to the 43.27 level. That would be your one-to-one. That would be what we would call the minimum move. The expansion of that, just like Marie and I took a look at, the next level, if that were not to hold, if this is an A to B equals CD to the downside, would take you into about the 40.42 level. We really don't know if that pattern is going to play out until we get to that actual swing point, that B point, that 47.01 level. Sometimes it's hard to anticipate the C point of the A to B equals CD. And what I mean by that, when I've taught people how to utilize this pattern, Chris, what I've focused on is how to buy or sell the D point, the completion of that A to B equals CD pattern, because that is much easier to spot than knowing if you've just made that retracement, that's the C to D leg. That doesn't mean you can't trade it like that. It's just the easier pattern is when the pattern has completed and then you're expecting some type of counter trend rally in the other direction, which then could be a Gartley pattern, which has 5 different potential outcomes that you can measure along the way. But to come back to light sweet crude, because your question I think is light sweet crude going to continue to move lower, regardless of what that price projection is? Is that am I hearing you correctly?
That is exactly correct. Thank you.
Okay, so here's what we know today, and that is the following: that there is that price ran right into resistance, which was the downdraft that began on March 8th, right around the 53.43 level, just simply held as resistance. Then a couple of days ago, back on April 17th, a brand new market profile formed. Now, are you watching this on Tiger TV by any chance?
I am. Thank you. Yes.
Okay, so I'm going to turn price off here, and what I want you to pay attention to, I'm going to get rid of that yellow line as well, so you can see this little. Would you be kind enough to hold on through the break?
Yeah. Thank you.
Okay, so we'll go back to Chris in Montana. We're going to go take a look at this daily profile, folks, which was structured from a bullish standpoint, which has failed. And we'll come back and identify where price is likely headed to next. In Texas, light sweet crude. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're on the line with Chris in Montana. Chris, are you a fly fisherman?
I am.
You are?
Enjoy it a lot. Yes.
So you could teach me how to how to perform that task?
I would try if you would teach me how to do this.
Okay. You got it. It's one of the things that I have fished quite a bit, but I've never actually gone fly fishing. And I hear that any fisherman has got to go fly fishing. And is there really a better place to do it other than Montana?
I think Montana is the best place in the world to do it.
Okay, perfect. Okay, so let's take a look at this. I'm going to show you a couple different charts and things for us to take a look at that suggest that light sweet crude is going to head lower. The first, before we went to that break, we were trying to take a look at our market profiles. Now, these market profiles are kind of hidden levels of support and resistance for us. And when they form, they're excellent tools because they help us to identify what's going on with the trend and when the trend no longer becomes your friend out here. And today, the break below this brand new profile that formed a couple of days ago, the center of the box, the center line, it's really not the center because it's closer to the bottom in its structure out here, says that 52.21 should have been good support. The mere fact that prices closed below that, as well as the top of the weekly, the green line out here, suggests to us that at least the short-term change in trend has occurred inside of light sweet crude. Now, you've got kind of a wide-ranging bar as this is moving lower. This would suggest to me that light sweet crude is headed for the 47.84 to 48.67 level. Whether this turns into an A to B equals C to the downside, I don't know. We won't know until it busts out the lows. But to reach the conclusion that it's headed back to that 47 level, to me, that makes all the signals from this chart suggest that that is the case. The second chart that I'll put up here, and this is really kind of a clean chart, I mean, we're only looking at two indicators out here. We're looking at what I like to call my red line. That happens to be the oscillator unchanged line. And that, Chris, is tied into the very bottom panel, which is the price oscillator, the difference between two exponential moving averages, 19 and 39. What I want you to notice is as that counter trend rally took place, when you take a look at the bottom panel, price got right up to the zero level. And now it has deflected down. Today's action has deflected to the downside. See, we've got price below my red line in the top portion of my screen, just as the bottom line had reached zero yesterday. Now what we have is a falling price oscillator, bottom panel, below zero. And it doesn't get much more bearish than that. Now, that message would change if, in fact, at some point in time between now and tomorrow, the next day, whenever it might be, you were to see this price oscillator in the bottom panel get back above zero. But while it's below zero, we know we have a deflection below zero. And from here, this suggests to us that price ought to also fall. And then we just simply revert back to our market profiles as the target levels for where it is headed to. So does that, what questions does that pose for you?
No, that's a great looking forward. I really like. I have never used those oscillators, so that's something I'm going to have to look at and study more on.
Yeah, they're really great tools, especially as you get in that zero level. You know, depending on the side of the trade that you're looking for, because what you're then looking for is some type of confirmation. And they're just, they're great tools. And in this case here, timing wise, you knew price was coming up to a resistance level, and it has spoken as we look at it right now at 1:58 in the afternoon. So that's my take, my friend. All right. And one of these days I'm going to take you up on teaching me how to fly fish.
Excellent. Thank you for your time. I appreciate it. Have a great day.
You bet. That was Chris in Montana. Folks, we've made it through the end of the show. 2 days in a row. You got to like that without really coughing in your ear. Stay tuned. Our man David White will be up next. And then you got Tom O'Brien from 3 to 5. Hopefully we'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.